Hello guys, welcome to our channel again. Today in this most important video, we're going to understand what is fair value gap. So this is a topic under ICT, inner circle trade, and basically you can consider it also under the concept of SMC, smart money concept. So there is a big circle of ICT, and there is a little bit of portion of it calls as SMC. So under SMC and under ICT, there is a concept called as fair value gap. Okay. So before understanding fair value gap, I would like to share you a thing that fair value gap works because it is used by most of the professional trader into market. Let's say if you are an HNI's high net worth individual, and if you wanted to take a trade of 1,000 crore, let's say, then your quantity will be so big that the market couldn't supply it at a once time. What you will do? You will execute your order gradually, right? So let's say if you want to place your trade on 1,000 crore, then your share would be much more 1 lakh quantity. So in BTC or in any other assets into the world which cannot supply 1 lakh share, irrespective of high volumes, it doesn't even cannot share 1 lakh volume at a exact same time. It can't, because if you want to, let's say, buy something, there is also need a seller of it. Without a seller or without a buyer, there is no transaction happen between in the market, and if there is no transaction, then the order will not be executed, right? So that is the concept which you have to understand before jump into it. Okay, so let's go. So before understanding fair value gap on the candles on the charts itself, I would like to go through you the definition of it, right? So let's read it once. A fair value gap, which is also called FVG, is an imbalance in price created when the market moves rapidly in one direction, leaving a gap between the trading ranges of surrounding candles. What does that mean? It says a fair value gap is an imbalance in price created when the market moves rapidly in one direction. It tells us that the imbalance between the buyers and seller. The example which I was giving you is that if somebody is wanted to, let's say, buy 1 lakh quantity of shares into a particular time, then it's all of the share will not be executed at a once. What he will do? He will, let's say, execute first as a 5,000 share. Then he will execute at, let's say, 25,000 share. Then again he will execute 10,000 share. That is how he will execute your his 1 lakh share, right? So it is that wanted to tell us that imbalance between the prices, imbalance between the supply and demands. In a bullish FVG, price moves strongly upward and leaves an area with a little or no trading activity between candles. In a bearish FVG, the opposite occurs. I will explain you in the chart what's that trying to tell. Okay. Traders purchase these zones because price may later return to the FVG and react from it. FVGs are commonly used with market structure, liquidity, and order blocks to identify potential trading opportunity. Market structure, I have already tell you how market actually moves in the concept of Dow theory. Liquidity, I have told you, if you visit our channel, then you will find all of this concept. And order blocks is nothing like a demand and supply zone, a potential demand and supply zone where the price can actually move, give a big move to us. Okay, so let's understand FVG now in a practical chart. So FVG is something understand when the price give three big candles at a once. Mark my words, three big candles at a once. You can plot FVG in a 1 hour time frame, in a 15-minute time frame, in a 5-minute time frame also. But I will plot the FVG in a 15-minute time frame to better understand. Okay. So I'm on the chart of Bitcoin, and this is completely a fresh chart. As you can see that Bitcoin is running on. And I would like to go through you how you can plot FVG. Okay. So what I'm telling you that FVG is something which is happened when a uh, three big candle is formed simultaneously. Okay. So let's say these are the big three candle which I have seen. This is one candle, this second candle, this fourth candle. This is the big three candle which I would like to see in the chart. So how would I plot my FVG? You have to just simply came here, select the rectangle button, and what you would do, you have to just let me show you very clearly. This is your three big green candle. Plot your this rectangle, and just how you can plot it, you have to just this first candle high. This is the high of the first candle, and third candle low. This is the low of the uh, third candle, right? How I can plot it? This is the first candle high, third candle low. That would be somewhere between in the second candle mid. This is our potential FVG. Why FVG works? Because price tells us when there is a constantly big three green candle, then the price can actually fall from FVG and then again bounce back. There is a 60 to 70 percentage of the chance when the price hit the same FVG level and go on and continue the trade, right? So this is a proper example of it. So basically, if I choose the brush, so this is what, and if the price falls from here, the FVG tells us the price instantly got executed all of the orders of the SMC big players, and the price and then again shoot up, right? So as you can see, this is the exact point when the price came here and then shoot up. Okay, so this is how the FVG, you can plot it on a bullish signal. Okay, so let's plot it on a bearish signal. So let's take an example of a current chart always. So this is a constantly three red candle. I would not say this is a green candle, but we can consider it because this is a uh, falling candles. Okay, so this is the first candle. If you want, then you can avoid this two candle also and choose this is your first candle, second candle, third candle. But I will not do that. I will plot the FVG on this level. Okay. So let's say this is a first candle, second candle, third candle. We're talking about this red candle. Okay. How you can plot it? Exactly same. This is first candle. So first candle, we have to mark the low of first candle, and third candle high. This is the third candle of high. Okay. So if the FVG works, which is work as 70 to 60%, then the price could actually roaming into the level, and then the price would actually can fall from here. But if the price is strong, then the price cannot do that, and the price could break the FVG zone and create its own FVG zone, right? So if I would like to show you, if I would delete this FVG zone and try to show this FVG zone, so this is the first candle, second candle, third candle, right? How you can plot it? You have to just select the rectangle. This is the first candle high, and this is the second candle of third candle of low. This is a proper FVG zone for the bullish signal for us. Okay, so when the price can actually go up, then the price could actually take a support zone from here, and if the FVG actually works, then it will shoot up. That is how you can plot your FVG zone in the bearish and bullish market candles also. So I hope you got it. If you have any query, you can ask me in the comment sections and I will definitely try your questions, and you can watch the video again to understand more clarity. I will see you on the next video. Bye.